This is Alan Bush with ADMIS. In the stock index futures, we are seeing higher prices this morning. Much of this due to the economic reports that we did have earlier today, including the GDP that did come in a little weaker than expected. We also had pending home sales also on the weak side. And yet normally these would be considered to be bearish reports, and yet in the convoluted thinking of how these markets are working now, these are actually bullish reports because weaker economic reports suggest that the Fed will delay their tapering of the quantitative easing program. So stock index futures firming on these two weaker than expected reports. We did have the jobless claims coming in a bit lower, but these other two reports, GDP and pending home sales, tended to overwhelm the better than expected jobless claims number. Also, we do have the ongoing budget negotiations. Some view as a negative for stock index futures, but it could also be viewed as a positive in a sense that if there is a government shutdown, this of course would slow the U.S. economy and would be another reason for the Fed to delay their tapering of their quantitative easing program. Either way, it looks like a taper from the Fed is likely to take place later rather than sooner, and of course that would be bullish for stock index futures. Over in the foreign currencies, seeing the euro currency under some pressure, we do have some renewed political tensions in Italy, so that being a negative for the euro currency. Also, the pound under a little pressure, even though we did have UK GDP coming in at its best level in 3 years, coming in up 0.7% from the previous quarter, although that was generally expected. One negative, though, we did have some negative news as far as UK investments showing a weaker than anticipated decline, so that accounting for some of the pressure in the pound. Over in the credit markets, getting some signals that this market is not responding well to bullish news. 2 out of the 3 economic reports this morning coming in weak, suggesting that there should be some strength in the Treasury futures market, and yet futures are lower. Anytime a market ignores bullish news, that is a sign of weakness. So from here, I would expect lower prices for Treasury futures across the board, especially for the long end of the curve. So we're very much ignoring some bullish news that has to be viewed as a sign of weakness. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.